it underscores where we are going, I think, with everything, and especially silver, which, as a footnote, is even harder to get than gold. In fact, exponentially harder, in my opinion.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. And fortunately, it is that time of the week again for the physical silver and gold market update with Andy Schectman of Miles Franklin. And certainly some interesting times. I guess we're at the point where I would say when I talk to other people in the silver industry about the SLV inflows, the most common answer I get from people that I think are in position to say this is that they're just starting to believe the numbers can't be real. And certainly we've seen that on the retail level as well, which Mr. Schectman is going to talk about. So Andy, it's a pleasure to have you here today. And how are you?
Chris, I'm good, buddy. Thanks for having me. I appreciate it. How you doing, pal?
I'm doing well and getting ready for Silverfest, our upcoming party. And Andy, do we still have clearance? Silverfest, which is September 12th to 13th. Are we good to go filming that I can broadcast live from the Silver Vault?
Absolutely. I think we should, as a matter of fact.
All right. I hope you're going to
that's a
get
great idea.
ESPN game day set up as well, so we can have fans standing around and sitting on 1,000-ounce silver bars and all sorts of good stuff. Although, Andy,
Chris,
I got to warn you, I'm getting emails fast and furious about the Action Central Banker silver figurines, and I've started pinning the blame on you. So when we're done here, I know you're going to be making some phone calls because kind of like the demand for silver as I hear it, which sounds like things are picking up again, huh?
Chris, it's crazy. A week ago Tuesday, the U.S. Mint came out and told all of us authorized participants that they would no longer be able to make gold and silver at the same time due to the COVID restrictions of social distancing. And so they would pick and choose which metal they would run for a specific period of time. And they said this could go as long as 18 months. They're setting the stage for what I have long believed would define the marketplace, and that is inability to source product easily. This is a true story, what I'm about to tell you. This is 100% true. I had a phone call the other day for a client, a referral, for a client who wanted to buy 3,000 gold eagles in mint boxes of 500 each, 6 mint boxes of gold eagles. So you're talking about $6 million. And normally this wouldn't be a hard deal to place at all.
No silver in that order, Andy?
No silver in this order, but it's important to hear this because it underscores where we are going, I think, with everything, and especially silver, which, as a footnote, is even harder to get than gold. In fact, exponentially harder, in my opinion. But here's the deal. There are a handful of very, very large distributors in the United States, and I work with them all. I called 2 of them, 2 of the biggest in the United States, and these are companies that deal directly with the United States Mint. One of them feeds much of the gold to the United States Mint through a recycling program. These are massive, massive companies. In both cases, I was turned down. In the case of the first one, the bigger of the 2 companies, they would not take the trade. Now, this is a primary United States Mint distributor. They would not take the trade. They said they could do kangaroos because they have those on the floor, but they did not have enough to do this and would not go short based upon the information that they just received on Tuesday. They're not comfortable going short, that they don't know what the production schedule is like from the U.S. Mint. And this is just the very beginning. I called the other one, and on the opposite coast, and they said that they could do it at a very high rate, and they would be back dates, and it would take 2 weeks to get it, meaning no 2020s. So, but my point I'm trying to get to you is that, or to your listeners, we're coming to a point where product is getting impossible to get rapidly. Normally, a $6 million order in Gold Eagles would be no problem. Now, when the U.S. Mint says we're going to print or make, rather, one or the other, Gold Eagles, Silver Eagles, you can see what that says for the future of the production of Silver Eagles. And when you go back to the fact that 65% of all the silver mines were closed the first half of the year, and all the refineries in Switzerland that border Italy were closed. And now we had mint closures as well with the U.S. and Canada, and now we're looking at drastically reduced production. Getting product is difficult now, and it's only going to get more difficult as the trailing edge of the storm catches up with us leading into the election. Chris, I think it's the biggest thing people need to think about right now.
Do you think that could at all be connected to how we're seeing traders clean out the COMEX?
Yeah, absolutely, 100%. It's the same thing. It's I think it has a lot to do with physical possession risk. I want the real thing before the real thing isn't available any longer. And when you hear someone talk this way, who does it sometimes sells the product. It can go in one ear and out the other, but I think that was a really, really good follow-up to my point, in that if you look at who's taken the money off of the exchange, it's the other category in the COMEX on the Commitment of Traders report. And the others category is typically family offices and high net worth individuals. So you're talking the wealthiest of the wealthy, influential people that are running family offices and big high net worth individuals who know what they're doing are pulling their money or their metal off of the exchange before it goes force majeure and a cash settlement. And it goes all the way back to the Hunt brothers, Chris, and they tried to corner the market because the exact same thing that's happening today, only it was not even anywhere near what it is today. And that is that back then they realized there were far more paper contracts than there were bars in the vault. Well, that's exactly what's happening here. And the people who are rushing to pull it off of the exchange, they're doing it less to screw JP Morgan and the commercial banks, and more because they I think believe that it's a game that is, now that everyone's pulling it off, is rapidly going to have rewritten rules, and so they're getting it off while they still can.
Yeah, it sure does appear that way. And Andy, you did mention the force majeure in the COMEX, something a lot of people like myself have speculated about. Would that eventually happen at some point? Now, obviously, want to be careful in how we phrase these things because I understand people are investing. But do you think, do you see that happening or possibly soon?
Well, if it ever is going to happen, it's going to happen at the end of September, I would think, October, at the end of the delivery months, because I don't know what the open interest is right now. You could probably tell me, but I can tell you that I think the next delivery month,
it's
at the end of this month, is gold. It's gold, and then the next one's silver. And I think people are going into the election are going to try to pull as much off as possible. And so that in and of itself cuts off the ability for these commercial banks when they have to deliver. No one's going to naked short anymore if everyone is standing for delivery. And that in and of itself ends the manipulation game, because the naked shorting when no one stands for delivery, it's easy money for these guys. But when you got family offices and super high net worth individuals and funds that are pulling physical metal off, calling these short positions and taking delivery, and a lot of these, I think that's why you saw the metal go through all of these round numbers the other day from 18 to 26 in a period of 3 trading days, because a lot of these commercial banks must be freaking out, thinking, wow, if everyone stands for delivery with these big open interest numbers, we're screwed. you might as well cover right now and pay the piper now before you have to pay unlimited in an environment where you can't source the product.
Yeah, well, that makes a lot of sense, and it's interesting. Trying to pull it up here, but I believe in Ted Butler's last column, you mentioned that what was happening is that really this is the first time on that last move up in silver where the short position wasn't increased. And we've looked at it quite a bit on the show. And where if you don't have them shorting, well, then you think the price is going to go up. And Andy, it's funny. I was also remembering remember about, I don't know, maybe 3 months ago, I said, if the premiums stay elevated, won't we find out if there really is a physical delivery mechanism to the COMEX? Because, I mean, at some point, if silver is $25 for everyone to buy and the price is 15 on the COMEX, there's a little ARB there on the board. And sure enough, it seems like that's what's happened.
Well, yeah, if you're a refiner making silver buffaloes and you can get $4 over melt for your buffaloes, yeah, all day long, you pull it off at 15, hedge it, and then sell your buffaloes for a handsome $10 profit or whatever you're talking about, $4 profit, whatever. It's free money. Point of it is that yes, that can't last if you'll get all the refineries and all the big money pulling off until they're not able to do it any longer. And that's why it just seems like the rules have been rewritten. When you see Ted Butler say something like that, that's not small potatoes. That's like massive. When you're talking about for the first time ever, when you're seeing prices rise on a Friday by $1 in silver and $20 in gold, when you're seeing prices rise into and through options expiration, when you're seeing a massive run-up and shorts not increasing, these are all things that I don't ever remember seeing in my career. And to see it now in conjunction with 6 indictments in an ongoing investigation by the Justice Department, something's different. To see J.P. Morgan going long for the first time, the environment is different. And that's the problem here, is that so many of us are dealing with recency bias and normalcy bias, where our reality is of the shoe that drops every time. And one of these days it's not. And we've always said they'll make more money on the upside than they did on the down. That's just the nature of the game. And if they are positioned the way that they are anyway, they'd be foolish to continue to short in an environment like this where there's such voracious physical demand and people are pulling it off the exchange. That portrays for massive risk and potential unlimited losses trying to cover a naked short position when silver's that hard to get right now, Chris. I think it's a whole new ball game.
Yeah, and to that point, I did pull up. Hopefully, it's okay to read a short quote. This is from Inside Butler Research. So, by all means, if you're not already reading it, go subscribe to Butler Research. $35 a month, and you can stay posted on things like, lo and behold, largest gold and silver price rally in years, with gold up more than $500 and silver up more than $12 since mid-March, has been accompanied for the very first time with no increase in concentrated short selling by the 8 largest traders on the COMEX. Let me state this differently. One of the steepest gold and silver price rallies in years occurred because the big 8 shorts, and he tosses in, the super crooks at JP Morgan. I can hear that in his voice. Didn't add to short positions, cap and contain the price. We heard Bank of Nova Scotia pulling away. We saw that HSBC and CIBC got their clock cleaned in March. And I've reported how, not like I reported, I mean, it's in the data for anyone to see, but the 4 largest shorts in silver are about short 248 million ounces. So when silver went from 20 to 24, according to that data, they lost about $1 billion, and seems like they may be running for the hills a little bit, or at least might be well served to.
Yeah, it sure feels that way. And then when you put into the equation the inability to source silver on a massive scale, it brings into focus um, how this game could quickly come to an end. And they'll just capitulate trying to short it. They'll leave that game, and when the price is set to, to equilibrium to where it's supposed to be. Look, if you just look at a ratio of gold to silver of being roughly 42 to 1, 45 to 1 for the last 150 years, right now silver should at least be 46, 47 bucks an ounce, and then some. So I don't know. I think sky's the limit for where we ultimately end up, and
preferably before. Sorry, I couldn't contain it. $47, preferably before September options expiration cycle, if I could put that order in. I think there's a few people who would be okay with that one.
Well, you never know. I mean, look, if you get all of the banks stop shorting and actually turn around and go long, the sky really is the limit, Chris.
Yeah, well, I've been thinking about that, and I'll be careful in how I phrase this. This is not to say this will happen, but at least based on what we've seen and what's going on, I think we're in that phase of the game where just about anything is now possible in such a highly levered market where, we saw a very darn quick move in the last week, and I think we could see something that blows the doors off of that. I guess we'll find out soon enough. Real last quick one. Andy, any comment on what happened in silver during the Fed meeting yesterday, where there was a nice little spoofaroo there that ironically, it actually mentioned what Andrew Maguire emailed to the department or the CFTC in 2010, where he said before a labor report, it's like if the number is bearish for metals, they'll just hammer it. But if it's bullish for metals, they'll actually let it go up, let people buy and get on board, and then just freaking drill it, which pretty much looks exactly what happened on Wednesday of this week. Any thoughts on that one?
Yeah, that's just not how free markets work. You don't see a market go up and down like a yo-yo like that. And it also reeks of desperation. I don't know. It's not how markets work, and I think maybe we'll read a little bit more about really what happened. But yeah, I noticed that it shot way up and then shot right back down in just a few minutes time. So I'm not exactly sure what happened, Chris, but I can tell you whenever you start to see this kind of behavior and accentuated volatility, typically you are nearing a blow-off phase again in one direction or the other. So with all of this volatility, with all of this craziness, and the inability to source product, and the banks not shorting anymore, and people standing for delivery, and an election of a generation coming up right now, at least in terms of importance, I can tell you I wouldn't want to be short silver right now. And I think the banks are trying to dig themselves out of a deep hole. And before this is all said and done, Chris, I think you're going to look like the smartest guy on the block.
Well, gee, I hope things don't deteriorate that far. Although, Andy, you did mention one day read all about it. Fortunately, you don't even have to wait because it's interesting. This spoofing, actually, that's one of my favorite things I asked Bart Chilton where, if you have the number, silver's right around, $24 and you nudge it down a little bit, then does it drop and the same banks buy it back cheaper? He confirmed that was exactly the case. And you can read about that in the Big Silver Short, as well as handsome Andy Schectman's chapter, The James Bond of Precious Metals. And Andy, before we wrap up, do you have any super hot specials for our audience this week?
Yeah, we got some brand new 2025 ounce America the Beautiful, the current issue. I forgot the exact name of them, but they're in sealed mint boxes. We'll do those for your listeners at $479 over spot. That ought to be the lowest in the country. I do have several sealed boxes of them. I think Silver Eagles are way too expensive right now. And to get the 5 ounce 2020 America the Beautiful, is, in my opinion, every bit as good, and at almost a $3 per ounce discount to the Silver Eagle, it's a much better buy.
Well, Andy, I guess as best as I can figure, if demand is surging, supply is getting shut down due to COVID, and shortages or wholesale premiums rising, shortage of availability, seems like an interesting time. And I appreciate you joining me to check in on that. Again, Arcadia at Miles Franklin, if you would like to buy or sell anything from Andy or take him up on that special. And additionally, if you'd like to dig a little deeper into the fantastic spoof that I'm sure any day now the Department of Justice is going to come out and reimburse investors for as it went on under their watch. Again, insert sarcasm there. But that video is coming your way now.